agreeing on a bill that would dish out $4 billion to buy up and fix up foreclosed homes. My next guest says that you want to fix housing, then let home prices just collapse. Peter Schiff is the author of Crash Proof, but Manhattan real estate guru Dottie Herman says the idea might cause the market itself to crash. So, Peter, you say let him drop.
We got to let them drop. I mean, the problem is houses are too expensive. I mean, the problem
even now.
Yeah, well, you remember people borrowed all this money, and the problem is now they can't pay it back because they overextended themselves to overpay for houses. They use it all kinds of funky financing to afford it in the short run. But now that the teaser rates are resetting or the negative amortization is kicking in and the option arms are expiring, they can't afford the payments.
How much further should they drop?
I think they're going to drop substantially. I mean, there are places. Well, look, in California, I think in the last 8 or 9 years, prices tripled. You know, prices are going to have to come down at least 50% in these bubble regions.
Dottie, you're gulping. You're gulping.
I am gulping because you're generalizing. I mean, prices have gone up traditionally, and it depends on where you are. And there's many people that really didn't get caught up at all in this. And we're talking about some abuses that are absolutely need to be.
Traditionally, they've just gone up with inflation, and that's only with substantial investments by the owners in maintaining the property.
So you're not for this bailout? This
not
is
at all.
Artificially massive. Dottie, are you for this?
I think there's some pros and cons. I think there are certain people that you really will help by helping them postpone the adjustments, because there are many people who took it because they're younger and their incomes are going to go up. The people that should have never bought and should have never been lent any money, there's no hope for them anyway.
Well, he's saying there's no hope for the industry, period. For a while.
Well, first you have to let prices come back to a realistic level, and people have to look at homes as places to live, not as piggy banks or, gooses that lay golden eggs. And then, people don't need to spend 50 or 60% of their monthly income on their mortgage. And we have to go back traditional pricing in real estate. And no one's going to lend money. People are talking about the credit crunch, but how can you borrow money to buy into such an inflated market? Because nobody wants to risk it.
He's arguing it's still inflated.
I don't think anything's inflated. I think it's a supply and demand issue. I think there was
there's a lot more supply than demand even now.
Well, again, we're talking nationally. I'm in New York City. Prices are still holding up.
Well, New York's a whole other beast. But what are you seeing nationally? You don't still see there's a lot more.
Well, I see nationally, and it really depends on where. I mean, again, I think there's too many people that just generalize. If you look in San Diego, if you look in Florida, those are generally investors.
But this is your business,
right?
But
it's not just investors.
Investors where they flipped. Okay, they flip properties. They look to keep it. Now,
Dottie, people were buying houses because they thought they were going to get rich, and they were constantly refinancing, pulling cash out of their houses, spending it on automobiles. So
bottom line,
you're
saying we have a lot more to go. You're saying the worst is over.
And a lot of people are going to lose a lot of money.
I'm saying that there is a cooling off now. I mean, there's a lot of people who have a problem selling the house. It depends on when you bought it.
It's the bursting of a bubble. It's not a cool off. It's going to be a major implosion.
Worse, yes. Worse, no.
No.
Okay, there you go. Okay. Guys, thank you very much.